Welcome back to my channel. Today's topic is the difference between a breaker block and a mitigation block. For those that are new to my channel, I'd like to say welcome to my channel. And for those that have been here with me from the day one, I hope you are gaining some value in this full course channel. Now, I'd like to give a shout out also to my coach because he's the one that actually guided me to the level I am today. I'm always grateful to him. Now, market moves on a bullish momentum, higher high, higher low, higher high, higher low, higher high, right? We can see that here in a bullish scenario, a buy side liquidity was being taken out from here. A buy side liquidity was being taken out from here, which signals a break of structure. This for a bullish scenario. How do you know that your breaker block is about to be activated? When market breaks this low, normally it's meant to do touch here and move up, right? But instead, market broke this low, signaling what? A change of character, right? What will happen? Market will come around here and move down in its direction. In a scenario whereby there is an order block here, which you'd have marked indirectly, you'd have marked that other block here as your entry, right? For market to come to that other block and activate this other block here, you'd have marked that as your form of entry. But instead, markets not activate in that area. It just come up there and move down, right? Market is going to activate in this other block. I'm going to show you a secret that I was actually confused for a very long time until I discovered that secret. I'll show you in this video. Now, for a bearish scenario, we have lower low, lower high, lower low, lower high, lower low. The same thing happens here and continues the direction in the sense that there was a break of structure here and there was a break of structure here. So what do you see? Sell side liquidity was taken, sell side liquidity was taken. Normally there would have been an order block here, right? Which would have marked, let me make it bigger, which would have marked for market to get that other block and move down, right? But instead, market violated this upper zone here to signal a change of character here. What are you going to do? You're going to mark the last order block here as your form of entry. You enter your entry from there, put your long position around here and your stop loss around here, or if you have your good risk to reward, you can put it below here depending on the size of the breaker block. Now this is for what? Only breaker block. This is for the bullish breaker block and this is for the bearish breaker block. Now for a mitigation block, what do we have here? For a mitigation block, we have market doing higher high, higher low. What happened here? A buy side liquidity was taken, higher low. What happened here? Market stopped here and violated this low. Let me even stop it here so you can understand it better. Now, what do you see here? There was a break of structure here, right? So we're expecting that market mitigated either your fair value gap or your order block. But what are we expecting? We're expecting market to come and take out what? Our buy side liquidity on top here. Our buy side liquidity for a mitigation block. But instead, market did not take out the buy side liquidity. What did market do? Market got up here, but it did not take out the buy side liquidity. Market came and broke this low that would have been our order block that would have entered the trade if it had taken this buy side liquidity. Market broke that low, came back to that other block there and continued in its direction. Example is this: there would have been a break order block that would have been forming here, right? That is what you are going to mark as your what point of entry for a mitigation block. So do you know the difference between a mitigation block and a breaker block? The buy side or sell side liquidity would have been taken for a breaker block to be created. But if a mitigation block, no buy side, no sell side liquidity would have been taken to create a mitigation block. At least for a buy scenario. For a sell scenario, we have lower low, lower high, lower low, lower high. Market did not what? Did not break out this lower low. Oh man, sorry about that. Okay. Market did not break this lower low. Do you see? So this would have been a liquidity that was not being taken out, this area here. But what do we have? We have a break of structure here. But market should have taken, maybe come to the fair value gap or other block, but did not break this liquidity zone here to continue in the sell side. Liquidity was not taken. Instead, market went up and violated this low that was here, came back for the entry here and continued its momentum. That is the other block that would have been created if market had broken this low. The market would have mitigated and continued in its direction. Now I'm going to go to the chart to show you beautiful, beautiful examples that you would have taken the trade on. Let me show you examples. Now I'm going to start with what? I'm going to start with a breaker block. I'm going to start with a breaker block for you. Now, if you look at this chart very, very, very well, right? What do we have here? Okay, I don't like that breaker block. Let me find something very good for you. Find something nice for you. Now, if you look at this chart very, very well, right? What do you see in this environment? You see what? You see a break of structure here, which signals to you that a sell side liquidity was being taken, right? What now happened here? As this sell side liquidity was being taken, we expected market to come and take this other block as our form of entry, or this one, our internal structure inside here. We expected market to come in here as a retracement, take it that this other block here as our entry. But what happened? Market violated this high. Can you see? Market violated this high. And what do? You will mark this other block, this particular other block, this particular other block. I'm going to give you a very strong point. Sometimes, right? Sometimes the bearish week is going to come out of the chart, and many of us will feel like the whole zone is an breaker block, right? But the mistake that many people make is they will take the whole zone, but your main focus is the other block that was meant to be mitigated, that was being violated. That is where you take your entry from. You can put your long position here. Okay, let's my long position. Target this low around here, and you can target whatever you want to target for. Now, if you go around your chart, there are a lot of amazing breaker block. What do you see here? You see what? You see a break of structure. Can you see it? There is a break of structure here. And what do you see here? There was what? A shift in market structure. In this scenario, a buy side liquidity was taken. You can see liquidity was being taken, right? This swing point was being violated and this swing low was being violated. Now, many of us would have marked this whole place that, oh, all this place is my breaker block. No, your main focus should be this bearish candle. That should be your main focus. Your main focus should be this bearish candle that market here, and that's where you put your short position in that bearish candle. You can put your stop loss above here, or you can put it above here or above here and target the remaining position of your trade. Now, let me find a mitigation block for you. A mitigation block is very easy and is, I would say, is very sweet to find. I want to find one that's very, very explanatory. Okay. Now, if you look at this scenario here, we had a break of structure around here. Let me pick one for you. We had a break of structure, a swing break of structure around here, because this is the low and this is what? The high, right? But what happened? Markets got into this fair value gap, mitigated this fair value gap, which we were expecting markets to break this high and continue. But what happened? This low was being violated. I don't like this example, but this low was being violated. And what happened? Markets came here because this was the last swing point before this low was being violated. And market came here to react at this other block here, at this other block that was being violated. Let me find a good example that is very, very, very close to you. If you know how to sketch that drawing very, very well, it will be very easy for you to find a beautiful mitigation block. Okay, that's a breaker block. Okay, I have another one, amazing one here for you. What do you see here? There's a break of structure here. Okay, I don't like that arrow. There is a breakout structure here. While you watch this video, kindly stay on this video and watch it to the end so that you'll be able to get the full knowledge of how this actually works. There is a breakout structure here. We were expecting market to come in here, this other block, and what? Take out the liquidity opposite here to continue in its direction, right? But instead, this swing low was being violated. What will you do? You're going to mark out this other block that was being violated, and what that is your point of entry. Market has shifted structure around here, created liquidity though, and you can put your stop loss above here a bit and target wherever you are targeting as your take profits. I hope this video was impactful. Don't forget to subscribe to my channel. Ask your questions on the comment section. I'm always excited to answer all your questions. And don't forget to actually watch all the videos to the end. There's an amazing indicator also, before I forget, which is called Breaker Block by Lux Algo. You can add that indicator to your chart. Okay, I'm sorry about this. You can add that indicator. I also started it for myself here. You can add that indicator to your chart, and it's going to help you to locate all your breaker blocks in the chart effectively and very, very well. Let me see. Premium. Just go to your setting and set it to your taste and actually how you want to do it. You can see the arrow here. It's telling you that a breaker block has been created here, and that one was also created internally here. Can you see it? And you can enter here for also a breaker block. It will just show you like arrows to indicate a nice breaker block. You can come on the setting, set it the way you want it, how you want your breaker block to identify on your chart, and how you want it to show on your chart. So don't forget to subscribe again, and you do have a great day while you enjoy this content. Bye.